Thanks for joining me. I'm Willa, and this is Willa Trades. If you're here because you're interested in day trading. And what we're going to be doing right now is doing an actual watch list for the week. You've probably seen this on other channels if you're interested, if you just stumbled across mine. Um, I have been trading very selectively since January and February, really watching very closely what I thought would happen with the market relative to some of the policies Donald Trump is going to be enacting. We have a new administration, they're doing new things, and they're doing a lot of things. And I just have to trade based on my level of experience. Those of you who are joining me, you should know this channel is specifically dedicated to traders who are newer to intermediate level. If you're advanced and you have feedback, I'm always open and always listening. However, the big piece about our channel is this is about going through that process of learning how to become an exceptional trader. I would say I'm at the beginner slash intermediate level. Been trading for about 2.5 years. First 6 to 9 months I was swing trading, and then kind of gradually really got interested in the day trading aspect of it, and then had to figure out options and figure out which options I was interested in, and just kind of taking advice from a lot of the really successful traders about picking some options, really learning their characteristics, their character, so to speak, and then being able to trade those. So for me, I started when I was in the day trading aspect, trading individuals like Nvidia. That was one of my faves. Netflix, and also like Apple, those kinds of big names. Never got into Tesla, never got into Amazon. They kind of split after I had got into the market. And for those of you who don't know what splitting is, they basically slash the share price and increase the number of shares. So let's just say, for instance, Nvidia did a 10-to-1 split. So one share of stock then went to become 10 shares, but each a tenth of the price. That makes it more accessible to traders so they can afford it, because it's fractionalized, and that increases the number of people who can buy in. Also increases the number of shares out there. So I've listened to a lot of traders, a lot of day traders, and a big topic of feedback was always pick a few names that you can really understand. Most people trade ETFs in the market like SPY, QQQ, also DIA, and there's another one for the Russell. I think it's ITF. I never touched the Russell. However, I graduated from those, so to speak, because I was looking at those and using those, but I really got into a trader who was trading SPX, and I started trading SPX based on what was happening with the others. A lot of people now are graduating to something called futures. Over this last year and a half, there's been a big move toward futures. And primarily that's because there are a lot of what they call prop accounts, which are accounts that will fund you to trade, and they take a percentage of the profits. So a lot of people have switched over to that because it's a low risk, high reward kind of activity once you learn how to trade. I'm still in the options game. I believe in mastering something. That's just the way I approach my business. When I started my business in real estate, it's the way I approach just about everything. I'm going to master it. I'm going to figure it out. And then maybe I'll have that graduation point later. But right now, I'm still really interested in options. The upside to options are you get really explosive growth with very limited loss. The downside is, for those of you who are trading short-term options like me, you have different nuances that occur, like theta, which is called time decay. It means the option value naturally goes down over time as you get closer to the expiration date. Anyway, if you're new and you hadn't heard those terms before, no problem. That's why you got Google. Of course, we'll try to talk about them in future videos. But I just want to put you guys on notice. I'm making this video because I'm going to be doing a lot more trading and looking to do some live trading. I believe that I kind of got the beat on what's happening in the market, and as well as anybody can have a beat, but what's right for me. And I feel like I can come out with a better presentation for you guys. I feel like the market got really weird and really wonky primarily around the election. You got into October, November, December, January, February. So it's been an interesting time. And I think one of the reasons why you have advanced traders say that you need time in the market is because you'll develop a setup, or as they call it, an edge. And when you develop a setup or edge, which is your way of trading, or you have a particular setup that you like to see happen in the charts, you get used to that setup, and then the market will shift and that setup may not happen as often, or they may do more fake outs using that setup, and they may go to a different setup. And I feel like over the last 5 months, that's just kind of where the market's been. Like a year and a half ago, I spent time practicing and watching different setups, pick some setups that I really like. And then I saw probably summer of last year, while so probably May or June, I just saw some of those setups, them starting to do more fake outs, them doing smaller ranges for the day, not giving the instruments room to run, and then really kind of stopping people out more. So it's been very interesting to watch, and I think that was good for me. I lost money in May and June, made money in April, lost money in May and June as a result of me just kind of not adjusting to what the market was doing, and my setups weren't coming through. There was a lot more fake outs, a lot more traps, and as they call it, and I had to learn that. And so July I set out the market, and then funny thing about it is they were doing more of my setups in July while I was sitting out the market trying to watch it. But then you saw them come back in August, in September, and it get a lot more trappy. That actually is better for people who are trading futures, because you don't have to deal with theta or time decay. You just pick a price, and if it goes to your next price, you can also do short-term moves, small moves, or scalp moves, and get paid more, to be quite frank. So a lot of people were going over to futures. I did a little dabble in futures, but the the prop firms, it's just weird trading. It's almost like trading a paper trade account. I've got to get in the market and get my hands dirty. I've got to trade real money. And what I learned in that, though, was still very helpful in testing a couple of prop accounts, was that you have to be very careful to not lose yourself in the fact that it's not your money. You have to trade it like it's your money. And if you trade it like it's your money, then you'll be good. And so what I learned from that was I was showing a lack of discipline in how I was watching my setups. So that was great. I did it for about 2 months, then I backed off of it, came back, got a little bit more profitable, found some new setups, and I've been slowly rebuilding my account. It wasn't really broken down. I keep a small account that I'm working with. So just kind of rebuilding like my percentage of profitable days, and successfully executing. And of course I started this channel along the way around that time frame, because I felt like it'd be good, because a lot of people want to quit. They want to give up, before they actually get it down. I'm here for you guys. And the way that I'm saying, keep going. I had to learn that when I was in a real estate business and a real estate investing business, which I still deal with. There is a process to getting great at anything. And although it could be frustrating and tiresome, we have to keep going. We have to persevere and be persistent. So I know I said a lot, probably talked for about 8 minutes, but hopefully you guys can see yourself a little bit in what I said, and you'll take from that and use that to keep going. That's my hope and my intention. So behind me is the SPX options. I'm doing a weekly watch list. Today is actually President's Day, so Monday, and the market is closed. And with that being said, as the market is closed, it's a great time for us to kind of come up with what we think the market's going to do for the week. And you'll see exactly what I've been talking about when I pull up the next chart. But first thing I'm going to do is I'm going to look at the options just to kind of see. This is zero DTE options. I look at my open interest to just kind of see where there's anomalies. And the first anomaly that I see, on my call side is 60.50. So that means if we drop down to the 60.50, there's a fair amount of demand at the 60.50. If you come up, the next biggest bump is at 6,100, and I believe we closed just above 6,100 when the market closed on Friday of last week. So, so there's going to be a level of buy there. If we break 6,100, we're probably going to target, 60.70, and then 60.50. Below that, you don't really see anything, even if we increase the option set, besides it's too far away. If we go up, you see that there's going to be a certain level of interest when we get to 61.50. So that means when the market is already showing upside, there's a certain level of interest in people who are going to be taking out calls at 61.50. On the put side, you can see if we get to 60.50, there's going to be an accelerator of people interested in buying more puts, probably taking us all the way down to 6,000. So that's the way I look at it. If you look at it differently, definitely feel free to comment. I'm always looking at those, trying to learn and get better. So let's go ahead and look at our chart. So this is our SPY chart. And really let me show you my basic setup here. Let's change our time frame. Change our time frames. I've got a few different screens that I'm working with. This is what I call the base screen, okay? So on my base screen, I'm keeping generally QQQ, the 1 minute chart, SPY 15-minute chart, SPX 5-minute chart, and also SPX 2-minute chart. Now I've got another screen where I'm watching SPY and QQQ on the 5-minute, and also SPY on the 1 minute. And I'm also watching our futures, so our NQ, ES. One day I'll show the setup. So I'm keeping an eye on those. I've got like basically, I got a 3-screen setup. So I'm keeping an eye on all of those, and I'm using levels on SPY, QQQ, and SPX. And I have learned more recently to keep an eye over this last probably 5 months on what's happening on DIA or YM, which is the Dow. Because QQQ can be an accelerator for SPY, but because SPY and SPX are also taking into account other things other than tech. For those of you who don't know what QQQ is, it's a mirror, so to speak, it's an ETF mirroring the NASDAQ. And for SPY and SPX, they're mirroring the S&P. So there's an element of the S&P that's going to have other things like industrials and financials in it, and pharmaceuticals or healthcare. So you want to keep an eye on what's happening on the Dow, because sometimes they'll diverge. And sometimes you'll have it where they'll be in harmony with each other, and that's a great trading day because it's an easier trading day to read. And then sometimes you'll have them where they diverge from each other. So this messy chart that you see before you, and we start in our bigger pictures, this messy chart is our SPY chart, and that's what I'm using as our base. If you see anything from this chart full of lines, just know that we've been in a bull market really since 2023. I mean, the market has done nothing really but go up. It's, kind of rested, had a small pullback, and then go up. These candles are mostly green, and you can see even when we've had some kind of pullback, there's been a pushback up to buy. Now, if you're new, and this is our monthly chart, by the way, if you're new, if you go back, this would be an example in 2022. This would be an example of when we were in a bear market. So we had several consecutive, months almost of some kind of downward trend, and the market was on a pullback. You can see the year before that in 2021, coming out of COVID, 2020 and 2021, the market was just on a bull market. So we had a bull market, we had a pullback, we had a bull market, we had a mini pullback, and then we had a bull market. So that's on our monthly. So what does that tell us? The market right now, until further notice, is still favoring the upside. And a lot of my original setups I came up with in 2022, and they still worked in 2023, but I was still a little bit more hesitant, and psychologically I wasn't there yet on my trading. So as a result of that, I did okay, but I didn't do as well as I should have done. And then we went into a bull market. And so in this bull market, it's been really interesting to see how those setups go. So this is our monthly. I've had to come up with new setups, and this is why time in front of the chart, and you get better over time, because it takes time to really develop. This is our daily chart. See, I'm in our daily chart, and I know you guys are like, there's a ton of lines. A lot of people show you guys black charts. Not me, I'm sorry. I'm not there yet. I'm still using all of my levels, and especially in this case, we've got so many what we call gaps below. that I'm really expecting at some point there will be a bear market. And in the bear market, we're going to go back and try to visit a lot of those levels. Even right now, we've got a couple that are still below us. So here we go. If we come into really since election time frame, there was a nice range leading into the election. Then we pushed up, we ranged a little bit again, we pushed back down, and we've since come up since basically January, right after the inauguration, and we've been ranging. So let me zoom in a little bit more so this makes more sense. It takes a lot of the lines and spreads them out. So you can see here that we've got a range with the all-time high being about, we broke the all-time high actually on Friday. It was at 610.78. We broke up to 610.99, so almost 611. So you can see we've been ranging. So this looks like we could be breaking out of a range because we did break above supply. So the first thing that I'm going to be looking for on our SPY chart is to come back down and retest this area. Now you can call this a mini retest here, but I'm going to be looking for something a little bit more pronounced. So we're going to push up, we're going to come back down and potentially retest. Let's see where our 21-day moving average is. So our 21-day moving average is right here, the dotted line. So we're pretty far away from it. At this point, we're about $8 away. First day of the week, very unusual for us to go back all the way down and check it. Although this is going to be an interesting week because it's options expiration day for the monthlies. Options expiration day for the monthlies. Let's go in and see what the news is for the week, and that'll kind of give us an idea of what we think. I'm going to bring this up. This is a market calendar for the week. Those of you who've been around, you know. So it looks like we've got a bunch of Fed speakers on Monday. That's today. Tuesday, we've got Empire State Manufacturing Survey. Doesn't really move the market at 8:30. Home builder confidence could move the market a little bit at 10 o'clock. That's what we're looking for tomorrow. And then we get into Fed speakers. Never know what they're going to say. Wednesday at 8:30, we've got housing starts and building permits. And then we've got Fed minutes from their meeting that they had last month. Thursday, the usual initial jobless claims, manufacturing survey, and then leading economic indicators, and then some more Fed speakers. Friday is going to be the big day because that's options expiration day. Plus, you've got a couple news with consumer sentiment, the final numbers, existing home sales, and then you got PMI at 945. Big deal. Next week, not a lot going on. Initial jobless claims, durable goods order. So Thursday, there'll be some movement. And then you got PCE, which is a major input to how the Fed is calculating what they're going to do about interest rates. All right. It gives us what we're going to work with. So tomorrow, not a lot really happening in the news front. So usually on those not a lot happening days, what you really have to watch out for is, of course, if Trump is going to say anything, or if anything's going to happen in the general news that could really shake us overnight. So we don't know that. We're going to zoom in now. We're going to go to our 4 hours. We see that we've been in a range. We see that we're actually breaking out of a range slightly. We tested breaking out of a range. We rejected, and we still got an old supply that could turn into a demand, and we're going to see. That's what this little box here was. It was an owed supply that we just broke on Thursday and Friday, and we're going to see if it turns into demand. We're going to zoom in on our 4 hour, and we look at multiple time frames because we just want to look for any indications or any indications of a pattern, any indications of any technical analysis that the chart may be giving us. We're watching mainly we're watching our levels. We're watching how we operated around our levels, and we're also watching our volume, our big volume days versus low volume. Last week it was low volume, which I thought was interesting because last week was CPI week, but it was low volume relatively. So, and then Friday, we finished out a big Friday with basically really low volume, really condensed, and we can only assume because it was a holiday weekend. So we'll be monitoring very closely. You can see here where we had the dip for CPI, and then the market spent the rest of the day buying it back up. Then we went back up and we exceeded. So that means that there was a lot of demand. There's going to be a lot of demand back down here. Probably want to look at a demand maybe on a 2-hour, 2-hour or even the 1-hour. And you can see here we came back and retested in pre-market. The next day, this was PPI day, and then we also continued going up. We pushed up and above, and in after hours or the morning before, we made a new pre-market high, and eventually that day on Friday, we made an all-time high. You can see here how it looks where the supply turned into the demand here in the pre-market and pushes up. So what does that mean? So it really just tells us that there's a high possibility that either we're going to test early in the week, we're going to test our supply turn demand, or we're just simply going to drift up. And tomorrow early morning will really tell us. Let's zoom in to our 2-hour. Boom. You can see you get more bars, more definition of what's going on. We're going to zoom into what's happened most recently. And you can see here, let's see what happened in the after hours session. So we saw after hours sell off. And because the market was closed on this Monday, we don't really have anything going on. So this is our 2-hour. This is where we flushed. Still not a clear demand. We're just going to use this as a demand. We're also going to delete this old Fibonacci. Yeah. So our big level that we're going to be looking at to come back down and retest is probably the 608 right here. So if we break the 608.48, we're going to be looking for it to come back down and test that. And then if it fails that 608.50, we're going to look for it to come down and test the 607.4. Okay, 607.50. So 608.50, let's make a note of that. We're going to see if it comes back down and test. Now, mind you, it did that pre-market, technically pre-market, but it didn't do that while the market was going on during market hours. So we want to see a real retest during market hours. We're going to make a note of that for our watch list. So 608.50, then 607.50. Then if we continue lower for whatever reason, if we reject this area, continue lower, and we break through 607.50, we're going to be looking for probably this level right here, 606. And if we get really crazy, then we're probably going to come back down and test demand. So we're going to be looking for a test of maybe the 601 to 600 area. We're going to see how we react in that area. All right, so that's going to be our general methodology. We're going to look at our SPX chart. Since we trade SPX, we got to look at it, right? We use SPY a lot because SPY trades after hours and pre-market, whereas SPX does not. So you see a lot of the gaps. So we're going to look clearly. We have an all-time high here. We also did not break this all-time high. Very interesting. So we broke all-time high on SPY, but not on SPX. 661.27.47, which means we're probably going to come up and try to break it just to make a new all-time high so that it matches. High probability situation there. We did not make a new all-time high on SPX. They're usually in sync with each other. And if one's breaking a new all-time high, usually the other is breaking an all-time new high. So that didn't happen. So my first thought is we're going to come back down and probably test that 6100. Test that 6100, and then we're probably going to burst up. Or we're going to burst up and then come back down and test that 6100. We're going to burst up just to make us go to an all-time new high. So those of you wondering what are my lines here, you can see up here. This is the 100, and this is my simple SMA EMA setup. This is the 100 simple moving average. I use this particularly on bigger time frames. On smaller time frames, I use a 9 and a 21, even though this one I have an 8. I use a 9 and a 21, and sometimes a 55. So we see here where we were in that range, came up and we tested the all-time high. We didn't break it, which is really weird. So we're probably going to be breaking it. And then we're going to see what happens with the rest of the week. We'll probably even come back down and test this line at some point. Maybe for OPEX, because we had such low volume over these last 4 days. If the market doesn't just shoot up over the next 3 days, we'll probably come back down and test this 100. Let's go into the 1 hour. So yeah, 1 hour is telling us the same thing. This is the next level of resistance really here, the 6100, and then a breakdown probably to 6093 and really down into the 6073. Now we see what 6070 was open interest area, right? You got a lot of activity in here throughout last week, or the end of the previous week and the beginning of this last week. You can see this was a level of resistance, so that's going to be resistance turn into support. So we're going to watch that carefully. So our 6075 area after the 6100 area, and then finally we come back down here, the 6050 area is common. There was a lot of resistance over here at different points. You can see here. All right. So let's go to QQQ. We need to evaluate our QQQ. Let's go back out for QQQ because we have to treat it differently. We're going to look at our monthly there. See our monthly, see where we had the big pushback. Now look how it's different than SPY. SPY. See, this is the same time frame. You had an actual red candle. Whereas on QQQ, it did not close red on the monthly. See 3 month. And actually during that one, it made the all-time high. So it makes it very interesting. Let's zoom in further. Let's go into our weekly real quick. You can see what happened here in the weekly. We tested, we pushed an all-time high. We came back down. We moved up. Had a pullback and then a push up. Let's go in a little bit further to our daily. Okay, you can see here in the daily a little bit less of a range. I mean, there's been a range to it, but there's actually been a move, right? You can see here for the last like 3 weeks, it's up, down, but we moved up, and this looks more like a pullback here that happened on 212, which would be CPI day, and then we pushed up. And we did not break all-time high here yet, but looking at what's happening on SPX and SPY, I would expect for us to do it. Let's zoom in a little bit further. Okay, you can see here, CPI day, bought it back up, came back, did a little bit of a retest in the after hours to the pre-market on Thursday. And we had PPI, and you can see we pushed up, came up, leveled, pull back, push up. All right, and then a little bit of resistance we can see here if we zoom in on this 1 hour. See a little bit of resistance here at the all-time high, which is normal. So let's look at the open interest on our QQQ. All right, so QQQ. See the open interest here is at 545. Wow, that's a real move up. 540. So you've got open interest in here. 535, and mind you, we were at 538, at 535, and then down to 530. So pretty much 530, 535, 540. We got some. So every 5 points, you got some real open interest potential orders waiting. On the downside, at our 535, so we're at 538. So that means 535 could be potentially a real buy area. So let's look at that. We're going to look at that on the chart. 530, 535, 530. Let's go look at it on the chart. So if we were looking at it on the chart, 535 is about right here where we had that dip. So very real possibility we come back down and test it so that we can pick up some liquidity. That'd be right in here. And then we're going to go ahead and push back up. So the first day, I'm going to be looking for a potential range where we've got to go ahead and push through to an all-time high. Probably going to come back and touch and get some liquidity, especially since we had low volume. We're going to get a push up, or we're going to go ahead and break down. And if we break down, I'm going to be looking for a breakdown. Let's zoom out. We're going to be looking for a breakdown first to our 540, 534.62. So that 535 is really it. So we're going to looking for a 536.30. If we break through this 537.40 level. So we're going to look for a move down to 536.30 and then a move down to 534.50 or between 534.50 and 535. There's going to be a level of demand there. That's going to push this back up, give us enough to maybe break all-time high. And based on this, I don't really see any good trend lines to add in. Okay, perfect. So based on that, I think we've got our general plan. We're going to be looking for some kind of a push down so that we can get enough liquidity to move up, or we're going to look for a drift up so that we can get all-time highs on SPX and QQQ. Let's look at DIA real quick, just so we don't leave it out. Okay. DIA, we still are quite a ways away from our all-time high. So we're really just going to watch the movement on DIA. See, DIA, you've got, $6. That could happen in a day, but not as likely. Let's look at YM. I always see DIA better on YM. So there you go. So if you look here, we got a level of consolidation. We've also got basically see a trend see the triangle there. So we're looking for a breakout. Okay, so DIA is probably actually going to be our setup for breakout. We're going to watch here. We've been consolidating. So we're going to touch one side or the other. If we get above this line and we retest, there's going to be a big move up. And if QQQ is in alignment, we're going to follow it. We're going to follow it and go for that big move up. You can see here how on the daily, you had a big sell-off on DIA, and that caused a lot of the range with SPX and SPY. So I think we've got a good plan for this week. We're going to be watching for YM to do some kind of a breakout move. Either it's going to break out to downside or upside. There's not a lot of big news this week. We did leave one thing out, and it's the fun part. You got to take all these things into play. What earnings are this week? Let's see if NVIDIA is this week. Not really. Nothing big this week. We got some restaurant stuff, which is big to me in my long term. We got some builder stuff, which is big to me in my long term. Walmart's probably the biggest mover on here. That'll tell me a lot about what's happening in the economy. Walmart, Wayfair, Cheesecake Factory, the builders. That'll give me an idea of what's happening long term, but doesn't affect really my trading day. Walmart maybe. And why I say that about the long terms is because I'm watching what the consumer's doing. One thing I learned about going through the recession, being in real estate, is the consumer is king. Because if the consumer stops moving, everything stops moving. That's why we have consumerism, right? All right. So that's what we're going to be looking at. We're going to be looking to see what the Dow does. We're going to be looking to see what these industrials do. So if we see some kind of breakout move up and we see QQQ in harmony, we're going to take SPX and ride that thing all the way up and see whether or not we're going to break through some of these levels on YM to go to an all-time high. I think that'll be exciting. All right, everybody. Well, if you are interested in trading and you want more videos like these or more videos where I explain to you some of the basics, because a lot of the advanced guys, they don't do it anymore, definitely hit like and subscribe. And this week, I'm going to do some live trading. So let's see how it goes. I like to trade primarily in the after hours session. So not after hours, but after lunch session. So you'll see me pop up when everybody else is getting off. How cool is that, right? You can watch one of the big guys, advanced guys in the morning time, and then I'll be popping up